Okay, guys, let us quickly explain our note number 7 and our note number 8. So, our note number 7 is our capital, right? So, we know that the owners, or rather, right now we are dealing with partners. Our partners can contribute capital. This capital can be what? Can be cash, can be stock, can be what? Can be assets, right? So in terms of stock and assets, or rather fixed assets, we are saying we need the value of that stock or of those assets, right? And then that will be his capital, right? So under capital, you know that this capital is the amount that the owner, or the money that is used to what, to start the business or to keep the business going, right? So the first one that we have under capital, we have balance at the beginning of the year, right? So the balance at the beginning of the year, normally you'll get it from your trial balance. Then you have contribution of capital during the year. Remember that the owner continuously contributes capital. So when he contributes capital, you are going to put it under what? Under contribution of capital during the year, right? And this will be a what? This will definitely be a what? A plus, right? This will be a plus. And then you have withdrawal of capital during the year. The owner can still come back and say, please give me 50,000 of my money, or 80,000, or any amount of the money that I contributed. We cannot say no, right? So therefore, if the owner takes his money from the business, we are going to put it under withdrawal of capital during the year. And you're supposed to show it as a minus. So meaning that amount should have what? Should have brackets, right? To show this is a decrease to the capital, right? And then after that, you'll get balance at the end of the year. Right? For you to get balance at the end of the year, you say balance at the beginning plus contribution of capital during the year minus withdrawal of capital during the year. Then you'll get what? You'll get balance at the end of the year. So it's balance at the beginning plus what? Contribution of capital minus the withdrawal of capital, right? So that's your basically note number 7. And you need to make sure that you have what? Your partner's names and the total, right? And this total here, balance at the end of the year, right, of both the partners, you are going to take it to what? To your balance sheet, or what we also call the statement of financial position, right? Okay, then moving on, we have our current account, right? So if you can still remember, we did what? T account, right, of our current account. Okay, so let's get on to this note. We have what? Our 2 partners, right? So you may have what? 2, 3, right? So, but in this situation, let's say we have 2. It's Trish and Ash. Then you have your total, right? So the first things there is your salary, your bonus, and your interest on capital. All of these 3, right? Remember that we used to do them, right? And your salary has to be for what? For 12 months. The salary of the partners should be for 12 months, right? And then the bonus, sometimes the partners get bonuses, sometimes they don't, right? And then you have your interest on capital, which is usually is given as a percentage. Then you have to calculate from that percentage, right? So all of these 3, right, when you add them together, they need to give you primary distribution of profits, or we call them what? The primary distribution of profit. So whenever that I talk about primary distribution of profits, we are talking about what? Salary, bonus, and interest on capital, right? So you need to make sure that you have them there, right? Your salary first for 12 months, you add it together, you put it as your total. Then you have your bonus. Sometimes the partners, not both could actually get a bonus, right? So if the other one isn't getting a bonus, you're not gonna put anything there, right? Or you can just put a 0. Then you have interest on capital. You calculate what? The interest on their capital amount, right? And then it can be 12% or any other percentage, right? Okay, I made an error here. Okay, so what I did, I had written on the appropriation of net profit. This just shows we are sharing the what? We are sharing the net profit, right? Usually we don't write anything because we are sharing the net profit, right? So now your salary for 12 months of each owner, then you add it together to get your total, your bonus, one of the owners actually get a bonus, or sometimes they don't get a bonus at all, then you put the total there. Then you have your interest on capital, can be 12% or any other percentage. You calculate it on your capital, right? Then you put the interest there, and then you add them together to get your total. Then you have your primary distribution of profits. Like I said, your primary distribution of profits is what? It's your salary, bonus, and interest on capital. You add them together, then that will be your primary distribution of profits, right? So after adding them together, you'll get your what? Your primary distribution of profit, and then you add the amount there to get the what? You add these two amounts to get the total. Then your final distribution of profits. Like I said in class, for you to be able to get your final distribution of profit, you say your net profit, right? Minus what? Minus your primary distribution of profit. So meaning this total over here, whatever amount that you are going to get, you are going to use your ratio to share the remaining profit, right? And then I told you that when you add it together, it needs to give you what? It needs to give you the amount there that you were actually sharing with using the ratio, right? So remember, your final distribution of profit, you need to actually do what? Use that formula that I gave you to say what? To say profit or loss, or remaining profits or loss will be equal to what? Your net profit minus what? Minus your primary distribution of what? Of profit, right? So whatever profit that you get or loss, you are going to share it in a ratio, right? And then you are going to put the amount for each partner here and there, right? Then you add the total so that you can be able to get, you add the amount so that you can be able to get the total, right? Okay, then you have your profit per income statement. That net profit that you were using, you put it on your total, right? And then you need to make sure that these two amounts, when you add them together, they need to give you what? Your net profit, right? So for you to get the profit per income statement of each partner, you need to add your primary plus your final distribution. Then you'll get what? You'll get the amount. Then you add them together and make sure that it gives you what? Your net profit. The drawings for the year, you will get it where? From your trial balance, and also from your what? From your additional information. And remember that drawings, they decrease the current account, right? And then we have retained income or losses at the end of the year. So meaning, for you to be able to get retained income or losses for the year, you need to say what? Your profit per income statement minus the drawings. Then you'll be able to get your retained income or losses for the year. Then you add the retained income or loss for the year of each partner so that you can be able to get the total, right? Then after that, it's your balance at the beginning. So your balance at the beginning is of what? Of the current account, right? So you'll be able to get the balance at the beginning from your trial balance, right? So sometimes it can say a debit or a credit balance, right? So remember, when you do that T account again, your current account is minus plus, debit, credit, right? So if they say, okay, this is a credit balance, you should know that the balance at the beginning was a plus, and therefore you are not going to put brackets. But if they tell you that the balance at the beginning on that trial balance, it is a debit balance, you're going to put what? You're going to put brackets, right? And then you add them together, minding the signs, right? So here, you will say this amount minus this amount, right? Then you get the total, right? And then for you to be able to get the balance at the end of the year, you say what? Retained income or loss plus or minus the balance at the beginning. Then you get your balance at the end, right? Then you add your balances at the end for each partner. Then you'll get your what? Your total. This total goes to your what? Also goes to your balance sheet. So it goes to the balance sheet, and also we call it what? Our statement of financial position. I hope this is clear, right? So this is your format, right?